And England skipper Andrew Strauss arrived in London, proudly showing off the little urn. They'll spend 4 days at home before flying out for the World Cup. And Belinda, I just can't understand how something so small can be so impressive.
Well, Mark, you would know about that. Thank you very much. Weather's next with Jane Riley, but first, here's George Negus.
Hi, welcome to this video, which is all about seeing the bigger picture in forex trading to enhance your profit potential. And in terms of trading currencies, small is not impressive at all. If you think small or you have too narrow a focus, you will lose money. I mentioned or touched on this in some of my other videos in terms of, let's take traders when they view time frames. They think small, they want to trade within a day, they want to scalp. That's a guaranteed way to lose money. Also, they only see the chart in a certain way. They don't look behind the chart, they don't look for relationships across other charts. And again, I think that really does restrict profit potential. I'll come to why in a moment, how you see the bigger picture. But first of all, I want to start with one of the biggest myths of forex trading, which is where traders actually do admire big, and it's in terms of the big banks. There's a big obsession online with trading with the big boys, finding the levels they trade off and trading with them for profit. Very often see people put videos up on the net. They'll put a level where the big boys are supposedly coming in, and then they'll show the chart in hindsight, of course, where the price breaks, the profit was made. There's some justification of why the big banks were all in at that level. It's total nonsense. If you look at banks, they don't make money overall on managed money. Neither do hedge funds. I've mentioned this in other videos. The best probably make a few percent per annum. Most lose. Banks and hedge funds make money by churning over commissions. That's the way they make their money. And if you go and look at the statistics, you'll see how poor the performance is. Also, in terms of banks, there's this assumption they all trade off the same levels and all trade together. That is complete nonsense as well. They all trade in different ways, and there is no supporting evidence that you can actually find the big levels of the banks. It's just a myth that's put around online. But I think that there's one thing, I'm just going to mention it because I find it highly amusing, which actually makes traders believe that big banks make money. You go to a newswire and you're going to see this quote all the time. Let's say you've got a price that goes up and it's gone up, and then you get a correction coming back. A guy from a bank is interviewed and he justifies it by saying traders book some profits. You will see that quote all the time. You will never ever see the words traders took losses. It's always banking profits, which doesn't make sense when 90% of traders lose. And I think when a lot of traders who only read the newswires, they obviously see people in banks saying this ludicrous statement and believe they make money. Okay, I've laboured the point enough. Forget about trading with the big boys. Now let's move to finding out where the really big levels are in the market. Well, the way to do it is just simply use longer term charts, use weekly, monthly charts. You'll see the big levels on those. Try and line them up with the daily charts. You'll often have the levels coincide. They are the big levels. They're visible on the chart, and they're basically the levels that you need to watch. Doesn't matter who's trading off them, they are the levels, okay? So always try and use those longer term charts to find out where the big levels are. Now, in terms of looking at the price chart itself, there's another big movement on the net, which is towards price action trading. Don't use indicators because they're all lagging and they're a complete waste of time. That is the argument. However, that argument doesn't add up in my view at all. If you look at a price action chart, that's already lagging anyway because the price is in the past. And also, indicators give you an idea of historical overbought, oversold and mean average price. And that gives you a deeper perspective. If you know if a currency pair is overbought, if you're timing it, you know that basically the odds are in your favour if you've got a bullish extreme, for example. If you're using a mean price or an average price. You've got a target to aim for. You can also look at volatility. You know, we all know that big price spikes don't last. So if you've got a highly volatile market, you can see exactly how volatile it is with indicators such as a Bollinger Band. So I think if you use indicators, you get a deeper perspective into the price action. And it isn't the price action right now that's important, it's where it is in terms of history as well. So, I think, indicators definitely have their place in forex trading. And, if you use indicators, you don't have to use too many. You don't have to be too complicated with what you do. It can all be nice and simple. But, I would basically, disagree with the price action traders when they say all you need to do is look at the price. Yes, you can trade with price action, but indicators have their place in forex trading. And I think for most traders, they will help improve confidence and market timing. Now, in terms of forex prices on any pair, they are influenced by outside events. And I think traders just look at the chart and they don't think about the outside influences. And it was John Murphy who developed intermarket analysis, which I think is well worth reading for any trader, which basically links all the markets together from stocks to bonds to currencies, so you can gain a deeper insight and advance warning of when a currency might move. For example, Japanese yen is a safe haven currency. If stocks start crashing, Japanese yen is going to start moving to the upside. So I'd always keep my eye on the stock market when I'm trading forex. And also I would keep my eye on commodity prices in relation to the commodity currencies like the Australian dollar or the Canadian dollar. And I think that if you do see falling commodity prices and bearish commodity markets, that is going to weigh on the commodity currencies. And you can very often get advance warning by just looking in other markets to see what might happen in a currency pair. Now, a lot of people say, if you're a technician, you should never look at the fundamentals. I disagree with that. I'm a technician, but I like to know where the big fundamentals are and what the sentiment is in the market, because that gives you clues to where the chart might go. I mean, the technical picture just doesn't come out of nowhere. The technical picture you see on the chart is driven by the fundamentals and sentiment. So it's how investors view the fundamentals. By knowing how bullish or bearish a market is can alert you to taking profits or basically entering new positions. And I've very often said that you should look around the news wires and find out how bullish everyone is of a currency. If it's overbought, sell it. If it's oversold, then buy it. And also my favourite tool, I've mentioned it in other videos, people say I labour it, it's the CFTC Net Traders positions. It's the best tool for finding out the sentiment of the market. In my view, it's free, and if you learn to read it correctly, you can make a lot of money. So my own view on seeing the big picture is that if you broaden your outlook in terms of the way you look at the chart and the interrelationships between various markets, and just one point, I can't go into too much detail about intermarket analysis here because the video is too short, but I would strongly recommend you read John Murphy's papers on this. It really is interesting, gives you a deeper insight into price action generally. So I hope you enjoyed this video today. If you've got any questions or queries, I'll be delighted to answer them. Thank you for watching me as per usual. Take care. Have a good day.